Well, strong retail earnings helping the Dow Industrial Average post its biggest one-day point gain in 4 months. Dow gained 396 yesterday. Let's bring in Mitch Roschelle, PwC Partner, to look at those results. And, of course, really the strength of the consumer. Mitch, good morning.
Good morning, Cheryl.
Well, yeah, I mean, this besides the retail sales, of course, the Walmart number that we got yesterday, really does seem that the consumer is back and very confident.
Yeah, my two working headlines, the rumors of retail's demise are greatly exaggerated and apocalypse averted. So retail seems to be back. The consumer's strong. And this is exactly what we expected. I think the first quarter was a little disappointing because the Tax Cuts and Jobs Act really hadn't kicked in yet. But they have more money in their pockets, the consumer that is, and they're spending. And what they're spending on apparel, they're spending on paint, they're spending on cosmetics, all of which are discretionary items, which tells you have a very confident consumer. So
you mentioned the tax cuts. I guess we're really starting to see that kick in, as you mentioned, in Q2. But also wages are higher, unemployment is lower. Do you see any potential threats out there to those issues, and whether it's wage pressure or job losses right now?
Yeah, I think there are some threats to the economy maybe later in the year. But right now what's happened is we saw a decoupling at the beginning of the year where consumer confidence surveys were very strong, but we didn't see the consumer shopping. Now they're there. And the concern I have longer term is we are mounting a lot of consumer debt, right? So we've seen growth in consumer debt, the auto sector, the credit card sector, the household revolving debt sector. So if consumers start filling them, their enthusiasm is sort of catching up with them, we may see a little bit of a slowdown later in the year. But the forecast for holiday sales right now, the preliminary ones are very, very strong.
Well, you mentioned household debt, household borrowing, now at $13.3 trillion. In what context is that, though? Do you think that that's actually something we should be concerned about? Or do you think that means that we've just got a healthy economy and stronger GDP?
Well, what's interesting is the headline number of $13+ trillion, is very large, but as a percentage of GDP, it's only 65% of GDP, Cheryl, right now. And when you compare it to where it's been in past cycles when it's been in the mid-80s, so it's not that strong. What concerns me are the components of it. In the past, a lot of household debt was mortgage-related. Right now, it's actually not. The growth in mortgage-related household debt is slower than the credit card debt and the auto debt. Those are the ones that are most sensitive to interest rate increases, and we are heading into a period at some point of rising interest rates. So
Real quick, though, I do want to ask you about because of the real estate side, which is one of your specialties in your practice. We haven't seen real home sales, have been somewhat under pressure. Does that surprise you?
Well, not really, only because this is really an inventory shortage problem. And I've said before, you can't buy a house that's not on the market for sale. We've just seen a very, very slow amount of homes hitting the market, and that's a generational shift as baby boomers really just haven't been ready to put their homes on the market yet.
No, that makes sense. Mitch Roschelle, it's great to have you, as always, on the show. Appreciate it, sir.
All right, sure. Have a great weekend.
You too.